Hello, this is Brian Rezny, president of Rezny Wealth Management and host of the Rezny Wealth Report. We have an incredible show for you this morning, and as always, if you have questions, send them to the show at brianrezny@reznywealth.com and visit our website, reznywealth.com, to sign up for instant email alerts, download any of our groundbreaking free reports, and really learn about how to avoid bad investment advice. Rezny Wealth Management is a fee-only fiduciary money management firm. We actually manage portfolios, and we actually legally work for our clients 100% of the time. Unlike a Wall Street style firm, brokerage firm, bank, or insurance company who are not fee-only fiduciary money managers, Rezny Wealth Management is. I've been managing money for over 30 years, and it gives me great joy and pleasure to educate you, the listener, every single week to make sure you can make better choices around your retirement and your portfolio. You know, today's topic, I want to talk a little bit about investors often put up with mediocre advice for far too long, and that costs you not only financial security, but a lot of money. You know, managing money for over 30 years, and again, being a real money management firm, not a sales organization, the normal clients that hire my firm every week and every month often come from these Wall Street style firms, brokerage firms, the banks, or the insurance companies. And I often will have people that will come in and they'll say, Brian, I've listened to you on your TV or radio show for years. And we were always concerned about the advice we were getting from that big Wall Street brokerage firm, but we never really called for that, that meeting with Rezny Wealth Management. We put up with mediocre advice, as you have stated, for years, and we do feel that it has cost us. And let me explain why. If you're getting sold investment products with high cost, mediocre returns, and nobody's really, minding the shop, as we call it, ultimately that hurts your long-term returns. So if you think about this, if you're 30, 35, most people start saving money at that point in life. By the time they're 65, they've saved their money. In our estimation, in our opinion, the average investor, you, who are working with one of these firms that are giving you this bad conflicted advice or mediocre advice at best, often have half to 2/3 less investment net worth than you should, because of high cost structure, poor investment selection, real no management, or these conflicts. That is going to hurt your financial security. Conflicts, being sold inferior investments, rob your returns and your retirement. It's interesting. We get a lot of calls every week from people who are sold these equity index style annuities from these so-called advisors who, again, are not fee-only fiduciary money managers. They're salespeople with a fancy title of advisor or wealth manager. They're not managing any wealth. They're selling investments. But I look at these equity index annuities. The average investor that buys one of these equity index annuities is promised the moon in returns. But the reality is they often end up making 1.5%, if they're lucky, annual returns, if they're lucky. And it takes most of these people, when they buy one of these crummy annuities, 3 to 4 years to figure out they were duped and their retirement could be in jeopardy if they continue on that path. So again, conflicts not only with annuities, but non-traded REITs, maybe mutual funds, variable annuities, direct participation programs. At the end of the day, Wall Street firms, banks, insurance companies sell products they manufacture, and their salespeople, so-called advisors, are required to sell. Let's talk a little bit about procrastination, and I alluded to this earlier. A lot of you will wait a long, long time to really get that second opinion, to talk to a real firm about what's really going on in your overall portfolio. The longer you wait, the longer you procrastinate, it's only going to cause you less wealth and less financial security. You have to ask yourself, at some point, do you look out for yourself? And I know people will often say, well, I put it off. I was going to do it tomorrow. Change is difficult. You know what's more difficult? Having to go back to work when you're 75 or 80 because you got poor advice and your retirement portfolio was sold down the river. Hire a real money management firm to manage your wealth, not an advisor, which is really a salesman in disguise. Often, again, a lot of these firms, the Wall Street style firms, the banks, the brokerage houses, are really salespeople. They're advisors. They're really not managing money. They're only selling products those firms manufacture, and they require their advisors, salespeople, to sell. That's not good for your retirement, and it's certainly not good for your financial security. Never settle. Never put up with conflicts from a so-called advisor. You don't have to. You can find yourself a fee-only fiduciary money management firm like Rezny Wealth Management that can eliminate a lot of those conflicts and really put your legal interests first ahead of the firm. That's what you want, again, if you care about your retirement and your family's ultimate financial security. Hey, by the way, we've got an upcoming webinar, and it's free. The disturbing facts most investors are shocked to learn. The true cause of poor investment returns and why your retirement portfolio is at major risk. Go to ReznyWealth.com for dates and to sign up for my free webinar. It's next week. Click on that webinar tab. It will be a game changer for how you look at investing in the future, how you find advice, and how you ultimately protect your hard-earned dollars from really the conflicts and the cost structure of these sales organizations. As always, I stress to every one of you, go to ReznyWealth.com, sign up, you'll be glad you did. If you've got questions, send them to Brian Rezny at ReznyWealth.com. We love helping every one of you out. We want to answer those questions so you can hopefully make a better decision around your investment and your retirement. Tammy in Naples, Florida. Is Europe on a verge of a turnaround? Would you invest there? Tammy, I've talked about a lot of places, not only the U.S. over the years, but I've talked a lot about Europe. We have not owned Europe for probably 4 or 5 years at least. I would not touch Europe with a 10-foot pole. Obviously, we're coming out of the COVID scenario. The U.S. is on track, in our opinion, to have substantially better growth than Europe. Europe is still in lockdown. A lot of these countries, they're going to have major problems. They have major debt. They're already socialist. Their chance of really a great opportunity in some of these areas in Europe as an investment, I would say no. I think you have a better opportunity in the U.S. I would avoid Europe, but I will tell you this. The vast majority of new clients that hire our firm that are coming from these brokerage houses and banks still have all kinds of money invested in Europe. They call it diversification. Folks, you can diversify the portfolio without owning Europe or areas of Europe that really have no financial chance, in our opinion, or have more risk than the U.S. with little chance for any reasonable return given the risk you're taking. Make sure that you look at your portfolio, folks. Understand what's really in there. Europe, a lot of parts of the emerging market economies are not that great right now. Now, that doesn't mean that's going to be forever. 3 or 4 years from now, there may be pockets that actually start to emerge and they may be opportunities. But for now, U.S.-centric as always. Sam in Naples, Florida. Are rising interest rates bad for stocks? You know, that's a great question. So generally speaking, if rates rise slowly, no, it's not bad for stocks at all. In fact, if you look historically at past bull markets coming out of a recession like we are now, slow rising interest rates, the equity markets actually can do quite well. You don't want interest rates skyrocketing up, but ultimately higher interest rates are not bad for the overall equity market. But I'm going to say this. Interest rates are really low now. We've got about 1.6 or so on the 10-year. I do not see rates going up meaningful at all. Meaningful might be 0.5% at all, at least for the next couple years. The Federal Reserve has pretty much telegraphed that they're going to keep rates low. They want to get back to full unemployment in the U.S., which they look at 3.5%. That's going to take at least a couple years. So what they're telling you is we're not raising rates, even if inflation's running a tad hot, until we get back to where we need to be ultimately for the workplace, the worker, and wages within the U.S. Folks, I have to take a quick break. Go to ReznyWealth.com. If you're finding the advice you're receiving is just not working, you're sick of the conflicts, go to ReznyWealth.com. Click on our consultation tab. We do manage larger portfolios of $1 million and greater. So if you've got a larger portfolio, you're tired of the conflicts, the bad advice, you're second guessing the relationship you have, call us during the week for a consultation. You will ultimately be glad you did. Remember, procrastination is never good for your financial security, but calling Rezny Wealth Management and discussing your concerns is always a great option. I'll be right back after this. Hello, I'm Brian Rezny, president of Rezny Wealth Management. I've managed money professionally for over 30 years. The biggest mistake I see investors make, being sold an annuity. Annuities are sold on blatant lies, fake free money bonuses that never materialize for you, the consumer. Before your retirement gets ripped off by an annuity salesman, get my free report, Why Annuities Are Dangerous to Your Wealth and Retirement. And we're back, and we're taking your questions, by the way. Send them to Brian Rezny at ReznyWealth.com. You know, one of the things that I've learned managing money for over 30 years is the most important thing as an investor you can do is making appropriate changes to your portfolio when necessary. Now, I know a lot of you have either had the COVID shot, or maybe you had COVID and you're thinking about getting the shot. I can tell you personally, I did get COVID back in December, and I have had the vaccination. What's interesting, though, when I was getting my vaccination actually at the Sears store that's closed down now, and that's why I want to talk about change. As my wife and I are walking through Sears, which is closed down and empty, but they were doing the COVID vaccine there, what's interesting is, I explained to her, this used to be the richest company in the world, the biggest, the best, back in the 60s and the 70s. Nobody could compete with Sears. Well, guess what? Sears is not in business anymore, folks. All investments in your portfolio need to be researched daily. And adjustments or additions or subtractions to that portfolio need to be made. If you're not making timely changes to your portfolio, you might have Sears or something like it in your portfolio that shouldn't be there. I've talked about that as an example for years. Oil stocks are not great long-term investments. They may be short-term good now for a trade, but they're not going to be great long-term investments. And how many of you still own a lot of those in your portfolio? So again, change is important when it is due. If you're not making important changes, your portfolio will suffer. Jim in Marco Island, Florida. How could the recent election affect the markets? Are you making big changes to your client portfolios? Jim, I'm happy to say that we are not making major changes to our client portfolios. We've made some subtle changes. Last year, we've made some more subtle changes this year, but not drastic changes. The election is going to push the economy, some areas of the economy is a better way to put it, in a slightly different path. So remember, as I've talked before, Democrats spend money, Republicans spend money in slightly different areas. So with how the Democrats are going to spend money, there's areas that are going to be some maybe a little bit greater opportunity and a little bit less. So we have not made wholesale changes to our portfolio, but we have made subtle changes that we feel will give meaningful benefit to our clients and hopefully future returns and reduce some of the risk structure within a client portfolio. But again, you're going to have another election obviously in 2022 and then in 2024. You need to look at who's going to be in power, what the policies are, and what areas can maybe you exploit within that structure to better your position and your portfolio. Brad in Naples, Florida. I have a large allocation to cash as I was unsure about the past election. That proved wrong. What would you do now? Brad, you know, I look back at 2020, and now obviously we're firmly into 2021. I'm now looking at the next 2 years. Not that we don't make changes in the meantime, but I'm looking at the next 2 years. And when we look at the next 2 years, we look at the next 2 years every day, so it's a moving target. One of the mistakes that a lot of investors make is they have a bias. I don't like this election coming up, or I'm hearing about this on that. And they make these drastic changes like going to a lot of cash with no real research and no strategy. I get a lot of calls on my TV and radio show, Brad, questions just like yours. I went to a lot of cash. I sold out at the bottom of the market because I thought COVID was going to take down the world. This is exactly the reason, Brad, why you need a real money management firm like Rezny Wealth Management. You've made these blunders. That blunder might have cost you $300,000 or $400,000 in lost return in the last year because you weren't invested properly. What I find is investors that make these drastic decisions, again, are doing it from the hip, doing it from the gut. And it's their personal beliefs that are driving bad choices. That's why money management by a true professional money management firm, in our opinion, is more important than ever. By the way, Brad, you know what you would benefit from? Our upcoming webinar, The Disturbing Facts Most Investors Are Shocked to Learn. The true cause of poor investment returns and why your retirement portfolio is at risk. And again, I state at risk. So many of you out there that listen to my TV and radio shows, unfortunately, are getting advice that is less than advice, it's more sales. If you want a game changer for the financial security of your retirement, if you want a game changer the way you look at the economy and how you invest the next 5 or 10 years, go to ReznyWealth.com. Dates and availability to sign up are at ReznyWealth.com for this webinar next week. Click on the webinar tab. Every one of our TV and radio show listeners would benefit from this webinar. Again, it's a game changer for the way you look at investing, and it's a game changer on how ultimately you're going to invest your money and protect your wealth from bad advice. You know, as we go into 2021, and I've talked about this before, there's going to be areas that are going to come back much quicker. One of the areas that I talked about really towards the beginning of this year was oil and oil investments. Now, you know, previous to that, I really didn't like oil and oil investment related stocks like Exxon and things of that nature. Why? Because they didn't have the ability, because we were energy independent, really to make the kind of money they once did. So they weren't great investments. Then COVID hit and oil basically plummeted to essentially zero. At that point, oil stocks now are oversold, and this was really an opportunity, in our opinion, for a short-term investment that may last 30 days, maybe 12 months. It's when oil kind of gets back to that normalcy price, probably between 65, 70 a barrel. We may go a little higher than it actually as we start to drive production back and really people get back with their normal lives, not only here but around the world. But it's not a long-term investment, folks. It's more of a short-term trade investment within part of how we manage money. So again, look at all investments out there. Make adjustments when necessary, and sometimes there's mass opportunities. Another area that we've talked about repeatedly that, in my opinion, is probably one of the riskiest investments out there is the bond market. Interest rates are at ultimate lows. We have 1.6 on the 10-year. Could they go back to zero? There's a possibility. But in reality, if rates don't change at all, over the next 10 years, you're going to make 1.6% on your money. Even if inflation only runs 2%, you've got a negative return, and that's not good. I think there's a lot of investors out there still today that own too much in bonds, and they over-allocate to bonds based upon age, and they own the wrong kind of bonds. That ultimately is a risky proposition. I think a lot of investors have more risk in the bond side of the market than a lot of you probably do on the equity side. And yes, bonds can drop in value quite a bit. In fact, if you look at the long-term government treasuries this year right now, they're down about 11% year-to-date negative when the equity market's up. And people always say to me, I didn't know bonds could go down. They sure can, and they can go down a lot more than that. There's been time frames where bonds have gone down 20, 30% in value. So remember, all assets have risk. Make sure you understand that risk, and make sure you understand what causes that risk ultimately for your portfolio. Fred in Fort Myers, Florida. I'm currently managing my own money and having a tough time making investment changes. Do you have any recommendations? Fred, find yourself a real money management firm like Rezny Wealth Management. Managing money is a difficult and tedious process, and you have to like doing it. I will often have people that will hire our firm and they'll tell me the same thing you did. You know what, I bought XYZ, but I didn't know when to sell it. Or I kind of froze. I was looking at all kinds of different things and I didn't know what to buy. You need to have a process, Fred. And if you don't have the ability to make quick, important decisions around your portfolio, that's going to hurt your returns and ultimately give you a lot more risk. And I will say this, I've been managing money over 30 years. In over 30 years, I probably had 5, 6 investors that have talked to my firm about managing their wealth that actually were self-managing and actually did quite well for themselves. And I asked them, why are you here? They said, it's not for me. It's in case something happens to me. I want my wife to be able to go somewhere where I feel that they don't have the conflicts of Wall Street and banks. And that's why they were talking to my firm. But the vast majority of people that we talk to, unfortunately, that are self-managing, are really just buying things they heard about with no research, no strategy, no risk management, and it ultimately hurts your portfolio. Folks, I got to take a quick break. Go to ReznyWealth.com, click on our consultation tab or webinar tab. Go to ReznyWealth.com. I'll be right back after this. Hello, I'm Brian Rezny, president of Rezny Wealth Management. Investors are getting smart. They are moving away from conflicts, bad advice, and being sold junk investments from firms that are not family fiduciaries. Smart investors demand real advice and real money management 100% of the time. If you're tired of the financial runaround, download my groundbreaking report, 3 investment risks you must avoid now. And we're back. I hope you're enjoying today's program. As always, send your questions to Brian Rezny at ReznyWealth.com. I'll get to as many questions as I can. And make sure you go to ReznyWealth.com, click on our webinar tab for times availability and to sign up for my upcoming free webinar. And if you're a larger investor, call our office during the week. We manage portfolios $1 million and greater. And if you're tired of conflicts, bad advice, you want a firm that legally works for you 100% of the time and actually manages your wealth, that's Rezny Wealth Management. Mel in Cape Coral, Florida. I own gold and silver coins bought many years ago from a commercial. I recently realized these coins are way underwater in value. What would you do? Mel, first off, you should have never bought the coins from a commercial. These commercials are big sales pitches. You bought coins that were probably grossly over margined, meaning they charged you huge margins to buy coins that were worth a significant percentage less than you paid. That is not good. Most people who buy gold and silver coins get completely ripped off and often will pay 80, 100, 200, 300% over the actual value. So now you bought these things, you've owned them for years, and you're still underwater. At some point, you've got to cut your losses and move on. I would tell you this. Do a little internet search, see if you can find a reputable coin broker locally that you can go into that's got good reviews, and have them actually look at the coins you have and have them give you a fair value offer. Maybe go to 2 or 3 places, get a competitive offer, and then sell them and move on to greener pastures. And in the future, Mel, don't be caught by one of these commercials selling gold and silver because they're overcharging. You're not going to make money like you think. They try to give you the scare tactic and sales pitch, which ultimately hurts your money and hurts your return. Tom in Punta Gorda, Florida. You were spot on with your advice on small cap stocks the last few years. What overall returns from small caps versus large cap do you think will happen going forward? Tom, thanks for the nice comment. Great question. So this is what's happening. Small caps are kind of, we're getting this what we call the reinflation trade. They're kind of coming back to life. Small caps are undervalued compared to large cap stocks in general and have better growth potential, but will be short-term more volatile. So we do own small cap in our portfolios at Rezny Wealth Management currently. Our positions can change at any time, but realistically, I see small caps have opportunity at least through the rest of this year and potentially going into next year also. So we're watching valuation, we're watching momentum, and we're looking at a lot of the fundamentals around small cap, but I still like them. Don't overload the boat, maybe between a 5 and a 12% allocation, depending on your overall risk profile. But we do like small cap currently, and we think there's still opportunity, at least over the foreseeable future. Larry in Naples, Florida. What exactly are moving averages? Are they useful tools for making investment decisions? Larry, great question. So at Rezny Wealth Management, we look at the fundamental side of every investment. And that's really, you open the hood, all the spark plugs, the motor, all this kind of good stuff. That's the fundamentals. What you're talking about on moving averages is really technical indicators. And technical indicators are very helpful. We use those probably 20% versus 80% on the fundamental side. But it's nice looking at a picture. And charts or pictures, and they give you an idea of overbought, oversold conditions, depending on which indicators you're using. But moving averages are nice because you get a general idea what direction an investment is headed, and they're often good for overbought conditions on the short term and or oversold conditions on the short term. So again, a lot of things to learn about moving averages and tactical indicators, far more than I can cover on my show, but do some Google search, do some research, but I do feel it's a very useful tool in your portfolio. By the way, folks, we have an upcoming webinar, The Disturbing Facts Most Investors Are Shocked to Learn, the true cause of poor investment returns and why your retirement portfolio is at risk. Go to ReznyWealth.com, click on that webinar tab. The webinar is free. You will learn a ton. It will change the way you look at investing and the way that you protect your financial security from bad advice. Mike in Miami, Florida. What is your view on the equity markets? Well, it depends which one. If I look at the U.S. market, as I talked earlier, Mike, I look at it as favorable. We're going to have some volatility, as we always do. We're going to have some short-term corrections. That is extremely normal. But as always, we look at the U.S. equity market as a great opportunity that really the next 2 years and the next 3 to 5 years after that. The economy is going to grow. There's money being spent on stimulus, pent-up demand. People are getting back to work. That is ultimately great, in our opinion, for corporate profits, which could push the markets ultimately higher over the not only the short term, but the long term. Folks, I'm just about out of time. Make sure you do go to ReznyWealth.com. Click on our consultation tab as always. We manage larger portfolios of $1 million and greater. If you're unhappy with the way your money is being managed, if you are tired of bad advice and bad client communication, call Rezny Wealth Management. We are a real money management firm, a fee-only fiduciary money management firm, providing exactly what you need. Real advice, real financial management, and we always legally work for you, the client, unlike Wall Street firms, banks, and insurance companies. The sad fact, most advisors are really salespeople selling products they're required to sell and ultimately are not managing your money at all. Go to ReznyWealth.com. Fee-only fiduciary money management, providing, again, actually what you need. Real management of your wealth. And as always, go to ReznyWealth.com, send your questions to Brian Rezny at ReznyWealth.com, and make sure you have yourself a safe and profitable week.